Thanks for checking out ChartGuys.com, the definitive home for technical analysis online. Our passion is understanding the market and identifying trade opportunities. Our goal is to share our success with others through consultation, training videos, and educational course materials. Get the skills that will make you a more confident, effective, and informed trader. Join us today for access to daily analysis and live market coverage, a thriving community of over 1,000 active members, and hours of exclusive educational content. Come for the education, stay for the community.
Hello, stock friends. We're going to look at stocks and stuff today. We got a bunch of USMJ names. We're going to look at GWPH, IIPR, Kira, CWeb, TRUL, IAN, GTII, OH, CIEL, HARV, ACRG, TILT, MMEN, KSHB, CBSI, NBev, BAM, and Slangs, SLNG, slang. So we'll start it off with GWPH, and we're going to preface everything with the fact that the S&P 500 has been very strong with 7 days in a row of higher lows. That is the ideal operating environment for the MJ sector to see the bulls thrive in. So we are just aware that the next time we consolidate, we're going to look for a daily high or low on the S&P 500. If we lose the daily uptrend at any point, that's going to shift our perspective and look for potentially further, or I should say more prolonged consolidation than we have been seeing. There's no sign of that on the immediate horizon, but we know it's going to be inevitable sometime in the next couple of weeks. So it's important to be keeping an eye on as always. So GWPH here, we're looking at the weekly time frame. And while this is not the ideal textbook scenario of the S&P, or I should say of the cup and handle pattern, because we broke to a higher high, it still has that psychology there. So the textbook pattern is the left side of the cup is higher than the right side. The inability to break resistance on the right side leads to profit taking and consolidation. It also gives bulls a chance to load up that missed the train, and then we see that breakout. So while we did break to a new all-time high by about 1%, this is essentially the same psychology. We're looking for healthy consolidation and the potential for continuation up towards 200, which would be our target if we do get a new all-time high. And this is definitely one to watch in the space. This is the OG name for USMJ. It's been around the longest. It's some of the biggest market cap. And we've been covering this one for a while. Put out a fundamental video, I think back in 2016 when we were down in the $80 range, but worth checking out. That's somewhere buried in the YouTube universe. But it's worth watching for the potential continuation and also the strength in the biotech sector. So XBI is the sector spider of the biotechs. And it is for the S&P 500, I assume. And it is. But it just broke bullish. Look at this daily pattern. It was a really nice tightening one. We had a double top, higher lows, so an ascending triangle, triple top, quadruple top back on Wednesday, Thursday. And then look at that clear bull break on Friday and a strong close at the high of the day. So this is now breakout mode for the biotech sector. And the question is, how much upside can we see as we make our way back towards the all-time high, just like the S&P 500 is doing? But after a month of sideways action, pretty healthy consolidation, and now going for that continuation. So that's a good sign for GWPH, who is definitely in that sector and does see some correlation to it. So interesting that the uptick in volume occurred for GWPH on a green day Friday as well. Normally on inside bar days, you see declining volume because it tells you it's a tightening range and pretty much sideways consolidation. So keeping an eye on first resistance of 170, 174. If we break that level, that's the first indication that our weekly higher low has been established. And what also stands out to me is the fact that we had a bear break with no follow through. Below 160.24, there is no support because of this gap, and we only broke it by about $1.20 before the bulls bought that dip. So a bear break with no follow through and potentially looking in the opposite direction. Now we actually have a member who's just started only taking that kind of trades, focusing on one kind of trade, and his trade that he's focusing on now is fake outs. So breaks and then looking in the opposite direction when they don't get follow through, and he's been having some success with that. So I assume that this would be on his list in terms of fitting the criteria of that, but worth keeping an eye on for that healthy weekly consolidation. IIPR, congrats to the bulls that did get into this trade. So I exited for tiny gains early. So this weekend I go back and analyze, what was I looking at? What was my thought process? What could I have done differently to have stayed in that trade with a little bit more conviction? But again, where I am at in my career of technical analysis and trading, I am in a more conservative mindset. And when I make mistakes, it's going to be leaving money on the table and not losing money. So that's just where I'm coming from as a trader. I'm not going to be taking step backs in my account. That's going to make me more cautious. It's going to make me miss a couple trades here and there. I'm okay with that, but I do want to learn and potentially make a better decision next time around. So we are getting this bounce. We are looking for a lower high compared to 90.67. We have the hourly uptrend to be watching at this point, and we have a higher low at the end of the day, 82.55 and 82.14. Those are the most important short-term supports. If we lose those levels on Monday without breaking 84.25, then we are going to say that our daily lower high is likely set. If we do break 84.25, we're looking back up to the mid-80s. This is where my target was initially, pretty much Friday's action, where I would be exiting slowly, scaling out into this if I were still in the trade. So the entry was in the 76, 77s, and would have exited in the 82s. I would have taken a partial position off, and then depending on what Monday does, I would have likely taken some more off. So again, congrats to those bulls that did get in. Weekly time frame, higher low certainly looks set with that big bullish doji, and the higher low is now 75.56. CURA on the daily time frame. So now we're in an area where the significant bull runners are giving us some daily consolidation. And again, daily consolidation in daily and weekly uptrends in a bullish market environment is when we want to be looking to enter. And look at the last consolidation. Big bull volume, declining bear volume, higher low set, a little bit of sideways action, and then the breakout. Declining bear volume, increasing bull volume on the way up, declining on the way down. This is textbook of exactly what the bulls want to see, and we're going to be looking for a change in the hourly trend to indicate that the daily higher low has been established. At this point, the bulls would need to see a break of 1345 and 1363 to change that hourly trend. Otherwise, we're looking down at 1303, the temporary low. And if we do keep pulling back, it's no red flag unless we see some sizable bear volume, and we're going to be looking for potential entry for the potential continuation. And as I pointed out in previous videos, in my opinion, these really strong names that are in blue sky and coming off of blue sky, for them to lose the uptrend, I do not anticipate that it's going to be just a straight loss of the higher lows. In my opinion, we're going to form higher lows, and then if we're going to lose the trend, it's going to be on a lower high and lower low. That's what I anticipate as the most likely scenario for trend changes and losses of the uptrends. But in that scenario, it gives the bulls a lot of comfortability and wiggle room to work with, because if making an entry on that consolidation, we then have some time to see that we are unable to get that continuation and then exit ideally with break even or small losses, as opposed to, scaling in and then it just keeps dropping and we don't get a bounce. The only scenario that I see that happening in is if the S&P 500 sees a sizable pullback, and that would have to come out of nowhere to a certain degree as well. So CURA, we're watching for that daily higher low to form. Very healthy overall. Certainly a lead bull in the space. CWeb's doing the same thing. A little bit more bear volume, so maybe that would make me a little bit less aggressive on scaling in for a daily higher low. But anything above 24.72 keeps the daily uptrend intact, and we're going to be watching for a higher low to form compared to that level. So same thing, we need an hourly trend change to indicate that our higher low has formed. Anything under 30.78 is just an hourly lower high, and our support right now is 28.77, and the next level after that, I'd be looking down at the exponential support, which held the last two attempts at that, and that's going to be right at about 28, the low 28s on Monday. So another name where we're just looking for a daily higher low to form on this consolidation. TRUL, very nice bounce off the low of Thursday on Friday, and there was a trade opportunity there. I did not take it. I was focused on other things, and I generally don't trade a whole lot on Fridays. It's good to take some time off, but we've got 1869 as that low, and then first thing Friday, we bounced off 1883. So we held support by 14 cents, and then from that low to the high of the day, we ended up going 6%. So some really nice short-term opportunity mixed in there, but you can pretty much see we have a double bottom and a double top here. The clear resistance is 20 psychological, and we've rejected multiple times from that level, and the bulls want to hold 1869 to keep full control. So if that's as much daily consolidation as we're going to see, that certainly favors the bulls. It was just one red day off of that climax of that high, and it's all about the daily inside bar on Monday. If it breaks bearish, we have a lot of space to form the daily higher low. Anything above 1605 will do it. And if it breaks bullish, we're looking right back up to the all-time high. After 20, it's 21 and 21.65. And actually, that's not the all-time high. I take that back. But one of the few resistance levels before the all-time highs. IAN on the daily chart. So declining bear volume is a good sign. This is definitely one of the names that slowed down its momentum for the bulls recently. And that momentum has shifted over to names like CWeb, Cura, and TRUL. So keeping an eye on IAN's weekly chart, the bulls are hoping this is our weekly higher low, but to be confident of that, we have to form a daily higher low and then break 787. So the range right now is this 2 days in response to the action of the earnings report, and I do anticipate a higher low is likely compared to 699. The bulls are hoping it's at 728 and 726, a little base of support Thursday and Friday, but it doesn't have to be. We're just going to be looking for a higher low compared to 699. I have my core position from a long-term entry from 3+ months ago while it was still MPX before that merger. But I may add to that just for a short-term position if I'm going to look to play off of 699 support, make an entry, and then I would look to exit after just a few percent for a short-term trade and work around, playing around my longer-term position to lower my cost basis and break-even point on my longer-term position, essentially. So keeping an eye out for this tightening range. Let's see it on the 4-hour. So low, high, and we're just looking for the higher low to form in an anticipated 4-hour weekly equilibrium. GTII is starting to slow down a little bit. So we had a nice bull move this past week, and we had a pattern with higher lows every single day for a while, and that's now breaking. But again, look at the bear volume. It's just non-existent. We're not seeing a whole lot of profit taking. We did close near the low of the day, and if we break 2127, we will look for a clear daily higher low to need to form here compared to 1825. And you might be saying, why isn't that our daily higher low? And the reason is because we didn't really get any bullish follow through off of that level. We can see that we're just really topping out at this point, and I would not consider that a daily higher low. It is a support level, of course, but not a daily higher low. We would need more significant consolidation to give it that higher low, and that's just me as an analyst taking a little bit of creative license and, applying my own slight little twist on things. Because if we were going by a textbook definition, and if I were going to try and program a bot to look for daily higher lows, it might consider that a daily higher low just by definition alone. So that's where humans have a slight advantage over bots, in my opinion, to have a little bit of interpretation. So we have 2127, then we'd be looking down at 21 and 20 psychological, but this is another one where we would look for a potential bullish entry on that consolidation with a weekly uptrend, not a ton of resistance up here, making our way back towards all-time highs, and the daily uptrend not in jeopardy at this point. OH coming off the all-time high profit-taking day today, or I should say Friday, couldn't break the all-time high right at the open, and that was the catalyst for profit taking. Anything above 1105 is a higher low on the daily. We've got the daily 12-period exponential support acting as a support on the way up, so it's worth keeping an eye on if we were to head back to that level. We still have daily higher lows every day the last pretty much all week. So if we break 1251, then that's the signal that daily consolidation is underway. If on Monday the bulls hold 1251, they still keep that complete control. So that little pattern of higher lows on the daily, when you have it consistently 4+5 days in a row, that's when it starts meaning things to me. And we certainly have a lot of individual charts because of the S&P 500 doing it, that they're doing it as well. So daily higher low would be anticipated in the lower $12 range if we do see that bear break and the daily higher lows start to form. CIEL, same thing. Bearish reversal candlestick Thursday. Not confirming it Friday, but certainly close to doing so, and a close at the low of the day. Anything above 1409 will be a daily higher low to continue the uptrend on the daily chart. And the exponential 12 period has been holding here as well, so we'll keep that as a visual guide. Again, it's a moving level, and we don't bounce directly off that level when it happens, but it's a good visual target to keep an eye on. If I'm looking, where's the daily higher low going to form, that's why I keep this exponential moving average up. And, if we were seeing this price go all over the place, close above it, close below it, then I wouldn't care about it. But it's when I see it consistently holding on such a clear number of stocks that it does stand out, and it is a visual guide that I will use when looking for where that daily higher low could potentially form. So break 1640 first thing on Monday. We'll look for the daily consolidation to be underway, and we'll look for a higher low in the mid $15 range. HARV is already seeing daily consolidation. Definitely want to pay attention because this volume is pretty significant. So I want to look in and see where was that volume, and I can see a lot of that's bull volume. So we had a bull push that we rejected from back here on, let's see, that was Thursday. But then I can see on Friday, green candlestick, a bulls buying the dip had some solid volume. Bears didn't have much volume. And then the bulls had solid volume. So I can see that on the daily chart, a lot of that is bull volume. And you wouldn't know that unless you went and looked in at the details, which is why it's important to zoom in. Anything above 1180 is a higher low on the daily chart. So we're looking for that higher low to form here. Closer we get to that support, the less risk there is on an entry because we would want to stop out if the daily uptrend is lost. Again, the exponential support held the last test. Here we are trying to hold the exponential support again. Have to change the hourly trend back in favor of the bulls with a higher low and higher high to indicate that our daily higher low has been established. But a lot of healthy consolidation from a lot of these MJ runners coming off all-time highs, and bulls are looking for entries on consolidation that is healthy, looking for the daily higher lows. ACRG is in a tightening equilibrium pattern, so we're going to be watching for this one to play out over the next week or two. We have the high of 2320, the low of 1998, lower high potentially set. I need a little bit more follow through, but 2262 looks like our lower high. And if we break the low of Friday, where's the volume? So that favors the bulls. Look at the volume for the bulls on the way up. Bear volume unimpressive on the pullback. Solid bull volume on the way up. Bear volume non-existent. So if we break 2139 on Monday, we are looking for the higher low compared to 1998. And if this pattern breaks bullish, the weekly time frame, we'll be in a really good spot. So look at this weekly equilibrium that's been playing out. And we started to look for this weekly equilibrium months ago. As soon as we got this candlestick with that V-shaped recovery, I'm just recalling back to videos where you're saying watch for the weekly equilibrium because of that volatility and the most likely scenario. And now we're getting to a flex point where we could potentially break here. If we break this daily pattern bullish, we're going to be looking after 2320 at 2475, 2508, and then the all-time high. This is a pattern to be watching for. If we break bearish from this daily pattern, that means zoom out to the weekly and a new higher low has to form compared to 1601, and it hasn't happened yet. So right now, in this equilibrium on the weekly chart, the bulls are favored. If this is our higher low and we see continuation, that's very favorable for the bulls. If not, it's not game over. The pattern does not break. We still look for the higher low compared to 1601. So over the next 2 weeks, keep an eye on ACRG because the bulls might wake up here, and the volume over the last 2 weeks favors the bulls as well for me. And that's the first time I've looked at that pattern. So what do? I write it down on the piece of paper that's right next to my monitor to help me keep track of all the wild action going on. TILT. So I'm still in a TILT position. My trade game plan is looking for the weekly trend change, and we almost got it, but we rejected. So we have the low, the high of the bull move, higher low, and now a lower high. So we're in a weekly equilibrium. My stop is under this level of 262 because if that breaks, we lose that little weekly higher low attempt and the trade plan fails. So that would be my exit point. I'm sitting pretty much at about break even right now, so no red flag, and it is a small position where even if we do drop down and break that support, because it would pretty much require an 8% plus drop to break that support, I'm using a very small position to allow for 8% of wiggle room if that stop loss were to trigger. So we need to see a daily higher low compared to 262. It was an inside bar, so if we break that bearish on Monday, we need a higher low compared to 262, and then we're going to watch for this daily equilibrium to continue to tighten up into next week, and potentially the week after is when we would get the break, depending on how the next couple days goes. So keeping an eye on TILT, because if we do change this weekly trend, there's a lack of resistances before that all-time high, but at this point, that's a rejection and a failed bull break. And the other way to play this, if I were being more active in managing this position, if it were a larger position, I would have likely bailed on Friday, looking for the hourly lower high to be set on this pullback and then reassessing the situation if I were being more active, but that's not the case. MedMen, lack of any follow-through is a bit of a red flag. Have to change the hourly trend, which we didn't do. We saw a great bounce, but when you see this kind of bounce coming off a downtrend with no follow-through, it's just a quick bull move that triggers some shorts to cover. But again, there's no sustained buying to get follow-through. So we just have hourly lower highs and lower lows again. We have a daily inside bar to be watching on Monday. Break 399, and we're looking right back at the low of 394. And if we break 410, we're looking right back at 417. So a tightening range. I have a very small position in MedMen here as well because I'm trying to get in for a weekly higher low compared to 355. It is a higher risk scenario because it's coming off of a downtrend, and I'm anticipating the attempt to change the weekly trend. So I'm using small positions, and I am looking for longer term positions ideally. If we were to get, the weekly higher low and higher high into April and May, then I would obviously want a long position. So starting to nibble, starting to build a little bit, but I will cut it loose if I do not see anything from the bulls in the next, few days here. KSHB, we're looking for a healthy daily higher low to form. This is a longer term equilibrium playing out here. And we have our high, low, lower high, higher low. This may be our lower high. And if we lose the daily uptrend, that is our lower high. So we're not confident just yet. We have our high of 628 and our low of 586 of consolidation. If we reject from 628 on the attempt to shift this momentum and we drop down and break 586, that tells us, yes, our weekly lower high is very clearly set and we need a new higher low compared to 544 as we are going to stay in this tightening pattern. If not, if we get daily continuation over 628, the key level for the bulls is 649 to get a weekly bull break. This is another one that's been on the back burner and we've been keeping an eye on, like the fundamentals, like the amount of revenue quarterly that goes on here, like the fact that they could uplist because they are not actually touching the plant, but we want to be patiently waiting for this equilibrium to play out sometime in April or May. CBSI, still in a position here. This was a really good trade example of playing based off support, really low risk, really nice risk to reward profile. I gave an example in Midas on Friday of how to establish that game plan, what the risk to reward scenario means, and still in this position as we're anticipating a lower high compared to 620. Bull volume unimpressive. If it were increasing bull volume on Friday and a strong close at the high of the day, I would say breaking 620 is a possibility. But because of that lack of bull volume, I say that it's more likely that we don't break 621 and need a lower high and need to continue to tighten. So I've got my stop loss pretty much at break even at this point. And if we get the bull break, we're looking up at 659 and then not a ton of resistance. Again, we get over 654 and there's no resistance to the all-time high. So that's why I'm looking at charts where we have a lack of resistance and looking to establish positions in those after seeing what all these blue sky runners have done. And again, it's the kind of scenario where, similar to TRUL, we have all these blue sky runners and traders are going to be looking to lock in profit on names that have run 50+% and looking at names that have not made their bull breaks on the weekly timeframes. TRUL now has, but a couple days ago it had not, and that was a reason I was interested in it. And now we'll keep an eye on CBSI for that same reason. We do have a hearing at the end of May for CBD products getting added to edibles and things, or to food products. But I'm not sure when the vote is. I believe that's just a hearing and not a vote. NBev. So if you're not in CBSI at this point, you're waiting for the daily equilibrium to tighten up, or perhaps maybe if we do reject from 621, you're looking for an entry on another higher low compared to 553. NBev, this is another longer term one to be watching because of the weekly equilibrium. So just rough levels. I like it better on the monthly, but we want some details. So high, low, lower high, and now we're looking for the higher low to form. We just saw a tightening range break bearish, so this means back off and be patient because the higher low is 303, and that is a long way away. So I want to be patient. Again, monthly time frame. Here's what it looks like. High, low, lower high. So you can see how everything is just a fractal of these time frames. How many times are we playing this same pattern on the 5-minute time frame, the hourly time frame, the 4-hour time frame, the daily, the weekly? On every time frame, these equilibrium patterns show up after volatility. They find an equilibrium range, they see price discovery, and then they break. Look at the volume drop off as normal, and then they break with a volume spike and opportunity. So this is a scenario where you're either waiting for the monthly pattern to break, which is going to take, potentially to Q3, Q4 2019, or you're looking to potentially make an entry based off the 303 support and anticipating that a higher low is going to form compared to that level. So for me personally, if this daily RSI gets oversold, which we're right on the verge of, I'm going to start scaling into a position trying to look for that monthly higher low, keeping, very patient, very slow scaling in. If I were to enter into a position, let's say just a hypothetical scenario, if I enter at 465 on a red day, Monday, and we have daily RSI get oversold, you can see we bounced off 30 RSI multiple times in the recent past. So I would make that entry. And if that bounce started to get going, then I'd just set my stop loss at break even. Because if I get stopped out, that tells me that our monthly higher low is unlikely to be set. And looking for a monthly higher low to be set on a daily time frame is looking like looking for an hourly higher low to be set, maybe on the 5-minute or 2-minute time frame. It's going to be a very higher risk, higher reward scenario because you're trying to look for the first signal that longer term time frame's higher low is set. And we can't be too confident because it's such a shorter time frame compared to it. If we're going to be really confident that the monthly higher low is set, we need a weekly trend change. If we're going to, and that's not even a daily trend change. This would just be a daily short-term bounce. So it's literally the first little signal that you could possibly get. But to go back to that trade game plan, if I'm in at 465 and we bounce up to $5 and reject, I'll just set a stop loss at break even. And then if we drop back down, I'm out break even, because that tells me we most likely have not set the monthly higher low yet. We cooled off RSI levels and we can see another leg down. So that's just a hypothetical trade. I am getting interested in NBev because of the daily oversold conditions, and because that monthly higher low, we are anticipating that is going to form sometime in the next 2 months. So going to establish a longer term slow and steady game plan for NBev. BAMM. If you are not in this position at this point, do not buy this stock. And even just seeing people that bought on Friday makes me really nervous. So yes, it's blue sky breakout. Yes, it is a massive runner. Yes, there's big bull volume, but you are playing with fire if you are entering at this point. This is the kind of stock that I would absolutely ignore, having gone 2 weeks at 100%, 130%. And if this runs another 100% over the next week, I would not care in the slightest. And the reason is that I know that the odds, statistically speaking, of making an entry up here do not favor the bulls. If you look at charts that look like this historically, you take 100 charts that look like this and you say, after 130% move, if I make an entry, how am I going to turn out in the next 5 days? Far more likely than not, you're going to be in the red. So that's just establishing the most likely scenario and then not being susceptible to FOMO. What I would look to do is buy the first 5-minute RSI oversold for a quick flip, or I would look to buy the first hourly oversold for a flip, or I would look to buy the first daily higher low after consolidation gets going. And that just keeps me protected to know that I'm buying into that consolidation rather than trying to buy into bull momentum and being stuck when that consolidation begins. So congrats to the bulls that have seen this run play out. But again, do not be making bull entries on a chart that looks like that, because that is 100% just getting in for the FOMO. Watch the daily higher low pattern. We have a higher low every single day now for weeks in a row. So breaking that pattern is the clear signal that daily consolidation for a higher low is coming. SLNG, very nice follow through. Again, this one is attractive because of the lack of resistance. 2 big bull days, no bear volume on the consolidation. Bulls quickly established the daily higher low at 228 on Friday, and then saw big time continuation and a close at the high of the day on big volume. So we're going for all-time highs up at 277. Again, this is a high-risk, high-reward trade, but at least we have a support level recently to be going off of. And again, look at the bull volume compared to bear volume. Very healthy higher low in continuation. And the question is, can we get that new all-time high on Monday, Tuesday, or do we need another hourly higher low before we do so? Plays out there all over the place in terms of different styles of setups. We have equilibriums where we're looking for higher lows. We have breakout names. We have blue sky. We have healthy daily consolidation after blue sky. This is the ideal kind of trading environment to jump around to different names, knowing that the overall sentiment of the market and the sector is bullish. Hope all is well. Hope you have a great weekend. It's planting weekend. I'm going to go buy way too many flowers and deck out a backyard. I'm looking forward to it. Have a great day. Do some good things. We'll see you soon. BAM and SLNG. So to start it off, have to preface everything. Preface. So adventure time. We are heading back from Vegas, going to the East Coast, heading to Florida for me, and booking it through Texas and Mississippi in the South. Didn't take a whole lot of time. It was winter at this point. We're talking December, January. So snow on the ground, and I didn't think it got that cold in Texas, but it does. But there were some great state parks, and state parks are kind of like national forest in the sense that if you're there on weekdays and it's not the summer, there is nobody there. So didn't expect to see frozen water in Texas, but some nice views and some nice hikes. And this was a little state park, and I was literally the only person there, camping out by myself and trails to myself, and it was great. So just avoiding the rush hour and not feeding the alligators can give you some solitude. And it wasn't too cold. Definitely had to bundle up at night, but certainly after that 12-degree night in Zion, everything else was just a bonus. And some nice trees and nature and angles of sunlight at golden hour. And from here, I did go on a little road trip in Florida, so we'll cover that next. And that's the end of my Honda Civic. So had that Honda Civic from high school, drove it across the country twice, one time with my buddies from North Carolina to California, down the coast, back across the South, through the Occupy movement, then took that individual road trip, so certainly spent a lot of time with that little guy. It's a good car. Never really caused me much trouble. And sent it off. I donated it that year, and my taxes were such that the donation didn't do anything for me, so I could have just given it away to a friend. But hopefully it helped out somebody. What else we got here? CBD. I found this photo. This is 5 years old. I was taking CBD before it was the hip thing to do. I forget which company made that. It certainly wasn't public, but probably not trustworthy either. Nice to see that we are getting some legitimate companies and some standards. Looking forward to standards in CBD because we don't know what mold is on those flowers that they're getting their CBD from, and we don't know what extraction methods they're using. So we do need some kind of regulation in that industry to ensure quality standards are kept. So I am looking forward to that part of things. And I'll see you all in the near future. And we'll go over a little Florida road trip, which is cool as long as you don't do it in the summer. And I made that mistake, and it was miserable. So have a good night. We'll see you soon.